A very good morning. It's Thursday, the 11th of March. Welcome to today's episode of Morning Wealth. GameStop won't stop. US inflation breakdown and ECB decision today. Those are the things that we'll talk about. Stocks rallied Wednesday after mild inflation data for Feb eased some fears about a rapid rise in interest rates. The Dow was up 1.5%, marking its 11th record of 2021 and the first close above 32,000, while the S&P 500 gained 0.6%. Yields on the 10-year treasuries declined about 3 basis points to about 1.51. Not everything was rosy though. The Nasdaq ended the day slightly negative, and beneath the surface there were signs of renewed volatility. GE fell 5.4% after agreeing to combine its jet leasing unit with rival AerCap and shut down its GE Capital unit. GameStop shares, which closed Tuesday at 246, surged as much as 41% to nearly 350 midday before falling nearly all the way back down to end at 265. In other corporate news, AMC Entertainment posted a narrower loss than expected and has more than $1 billion of cash on hand. Shares were little changed post-market. Oracle slipped after hours after revenue from its cloud unit barely missed estimates. Shares were down about 6.5% after hours. Bumble sales could be between 716 million to about 726 million. Consensus called for about 716 million. Shares were up about 6.5% after hours. Moving on to FX and the inflation data that came out yesterday, the US dollar traded lower against most of the major currencies on Wednesday. According to the latest report, inflation pressures are on the rise, but not as quickly as investors feared. US consumer prices grew 0.4% in the month of February, which was in line with expectations. Core prices, on the other hand, rose only 0.1% against a 0.2% forecast. A further breakdown, annual inflation rate in the US increased at 1.7% in Feb of 2021 from a report of 1.4 in January, compared to a market forecast which was pretty much in line of 1.7%. It's the highest rate since Feb of 2020, with main upward pressures coming from energy costs, namely gasoline, utility gas services and electricity. Prices of medical care services also increased slightly. In contrast, prices slowed for food, used cars and trucks, shelter and new vehicles, and cost of apparel also fell. On a monthly basis, consumer prices, as I mentioned, was up about 0.4%, which was in line with expectations, as gasoline went up about 6.4% and accounted for over half the increase in the last month. Annual core inflation, on the other hand, came in below forecast at 1.3%. Fed chair has been reiterating that inflation could temporarily exceed the 2%, although upward price pressures are likely to be temporary. The takeaway from yesterday's inflation number is whatever little inflation that we are seeing is coming from the energy prices going up. Going into this report, US dollar traders were positioned for a strong number, and when they saw the muted report, they took the greenback lower against most of the major currencies. Although prices are expected to rise further in March, for now, inflationary concerns ease somewhat, allowing yields to decline and Dow Jones to power to new highs. Of course, investors are also pleased to see that the House passed the 1.9 trillion stimulus package. President Biden is expected to sign the bill on Friday, and the Treasury could start sending out the 1,400 stimulus checks within days. The Swiss franc was the only that did not benefit from the US dollar weakness. Much of that had to do with the Swiss National Bank's endorsement of a weaker currency. According to Vice Chair, quote, "We are convinced that our expansive monetary policy with a negative interest rate of minus 0.75% and interventions in the foreign currency market is necessary to maintain the appropriate conditions of the Swiss economy." He also added, "We can go further with both instruments if the situation requires it." Lastly, ECB day today. The European Central Bank's bond purchase program will be the focus of attention Thursday. Most economists expect that the 1.85 trillion euro PEPP to be extended past its current end date of March 2022, probably for 3 months, though some predict verbal interventions first. Christine Lagarde in January asked staff to study various different ways of analyzing borrowing costs crucial for the decision will be the updated economic forecast. A draft of the forecast assume any inflation pickup will be fleeting. So the central bankers are always reiterating that inflation is, even if it comes back, will be of fleeting nature, while the market is a little more stressed or tensed about how that is going to play out. That's the update. Stay safe and healthy, and I'll speak to you tomorrow.